Rob Lukey with Shop Prop Realty and Our Capital Group. And I'm going to take a second to go over Shop Prop, some of the things that are upcoming there, Our Capital Group, some of the investments that we've done recently, and then obviously go over the Case-Shiller Index and talk a little bit about the home prices. Take about 3 to 5 minutes. Shop Prop Realty, as most of you know, we're smart buyers and the sellers go. We've returned, now crossed the $3 million mark, over $3.4 million. Has went back to our clients that either bought through us or sold through us over the last, time that we've been in business, over the last since 2007. And it's just continuing to speed up as more and more people realize that it doesn't make sense to give your equity away, which is what you're doing when you're selling or buying a house through a full commission realtor. As more and more people go the route of a more modern firm like ours, you're going to continue to see hopefully commissions decrease and make it less expensive for buyers and sellers to purchase homes. Going on to Our Capital Group, as you know, you can always click on past performance, and if you put in OCG and then welcome is the password, you'll see kind of where what we've done. We had one nice win over the last little bit of time. This was Lake Forest 14727 35th. We bought that on we bought at the beginning. Bought on 11/21. So in November, at the end of November last year, for $281,000. No rehab. It was just a land play, and was able to sell that for $395,000 at the end of this last month in March. So that was pretty good. You can always go on, and even though deals have gotten a little bit less attractive as more and more players have come into the market, but there's still some out there that we can buy from time to time, even though we're buying less now because there's just not as many good deals. But you can always sign up. If you sign up for an account with Our Capital Group, you can always search for properties, obviously, if you want. Majority of our clients are simply passive investors, where they'll go in and they'll go ahead and simply put in a passive bid, and then they'll basically direct us to invest, let's say, $100,000 in the next 2 properties or whatever, or at OCG's discretion, and they'll go ahead and simply say invest that, and then they'll go into the next properties that we purchase. And then what you'll be able to do is the current holdings. You can obviously see your current holdings that you're in, and if you want to view them, go in a little bit deeper and see what those look like and what kind of activity has been on it and so forth. Okay, so anyhow, that's Shop Prop in Our Capital Group. Getting into the housing market overall, it's a lot more of the same. We're continuing to see home prices, although choppy, especially last year after spring. Market really did slow down and actually came off a little bit. But overall, month over month and year over year is looking really, really strong, as you're having continued job growth, cheap oil, low inflation. It does support the market continue to pop up through these highs that we saw, that I'm going to get to in a second after I talk about housing starts. Because the biggest risk that we have right now when it comes to housing is interest rates. And obviously from the last Fed meeting, the Fed indicated that they may be raising interest rates. And because housing prices are rising, which says right here, rising roughly twice as fast as wages, it puts pressure on home buyers. So if interest rates go up, it could really slow down the market. So we want to watch that carefully. Housing starts are another indicator that is a little bit difficult to read, from a standpoint that typically when housing starts are as low as they are right now, we've been in a recession. And obviously we're not in a recession, but housing starts very low compared to past trends, and we need to watch that. On the flip side, we could say, well, housing starts are down, so that's going to continue to have a pressure on inventory. Low inventory may mean that we see another push up. So if all stays good and interest rates stay low, I'm still looking at the market breaking through the highs. We're back down, as I mentioned, into the 4% range, 4% year over year gains for the market. Remember, this was the high where we were seeing 15, 12, and we actually got up to where we were seeing in the beginning of 2013, 13% year over year returns. Obviously, you're not going to continue to see those type of returns. We backed off. We're back down in the single digits, and probably will push up a little bit if, again, interest rates stay low and housing starts to stay where they are. Here's the home price index and what happened to home prices. This was the 20 city day composite, the highs that we set back 2006 in some markets, in 2007 in more in the Seattle market, late 2006 in the LA Orange County area and the California markets. I still think that we'll push through these highs maybe over the next 2 to 5 years, and then from there, obviously, we'll have to see what happens. Most likely, come off again, and we'll be into another cycle. Hopefully, not as drastic as we saw the last one, but we'll typically have after we set through those highs, we'll typically have some type of retracement. Overall, everything's looking pretty good. City over cities, the San Francisco market is still doing really, really well. Overall, Seattle and Orange County, LA County are hanging in there. So anyhow, I hope everybody has a great day. Talk to you later.